I hope you've got some nachos there, guys, because we are dipping. Hopefully you guys appreciated that. To start the video off, trying to bring you a little bit of joy in what can be quite a turbulent time for the cryptocurrency markets. The markets more broadly, there's a lot going on the macro. We spoke about it a little bit yesterday. We reviewed what happened with the FOMC, the Fed rate decision. They lowered it by 25 basis points, which is 0.25%. However, they continue to not commit or to continue to committing rolling off their balance sheet, which means that they are not buying bonds, which meant that bonds spiked, which meant that despite them lowering interest rates from a federal level or from a central bank level, actually the free market element of interest rates in the forms of yields that need to be paid on the debt actually rose. It's a self-regulating mechanism, which means that actually what we're seeing is an uptick in the diversion towards the debt markets, and that's ultimately strengthened the dollar, the Dixie, which is leaning on markets broadly. We also have, and over the irony of the market selling off after Trump has announced that he wants to eliminate the debt ceiling, unlimited debt. Money is debt. It's an IOU essentially. It comes into creation through debt, and that's why Bitcoin was created. The irony of us selling off during this is quite interesting, but it has a lot to do with uncertainty. The dollar is an uncertainty trade. Bonds have been, that's where the 60-40 portfolio comes from. However, they're not acting as it yet. And the question is, well, when do bonds get a bid? And that should be increasing of liquidity for markets generally. And we're going to talk about all that. So we've got a hell of a lot to get into. We wanted to start off on a little bit of a joke, a little bit of a high note. What the best thing for me to do to kick this video off is to actually just look at the markets. One reason, and some of you may find it a little bit boring and repetitive, but one reason why we consistently look at macro weekly charts on a logarithmic scale is because it puts things into perspective. Obviously, we've spoken about all the technical patterns. This is the total cryptocurrency market cap, by the way, that we have. We'll look at Bitcoin in just a second. But when you look at the entire cryptocurrency space and you put this into perspective, I mean, we are still very clearly in an uptrend. We've had an unbelievable run that's seen us add nearly $2 trillion in value to the space as a whole. A pullback and a giving back of some of that is really to be expected. And when you look at it in this manner, it really kind of calms and simplifies things. I can tell who looks at charts and who just really follows social media and news headlines very easily by their reaction to these pullbacks. Volatile pullbacks are inherent to the cryptocurrency space. They are part and parcel, ladies and gentlemen. Everybody wants the big gains. Nobody wants to endure the kind of the cost of being able to unlock those sort of gains that the cryptocurrency market has to offer is volatility. We don't trade the cryptocurrency space. We very heavily pivoted, and I've got a Patreon of people that are trying to keep as safe as possible into being an investor in the market and investing at the right times throughout lows of accumulation in a cycle, what we'd look at as phase one, riding phase two, which is the uptrend, which we're currently in, and getting out when we're going into phase three, which is the topping of a market. And I do not believe the top of the market is in just yet. If it was, it would still be too early to tell. And what we can derive from looking at a macro chart is that this is still very clearly in a very strong uptrend. We also have a number of technical patterns that all give us confluence in regards to the direction that Bitcoin is heading in. And that's not just the case for Bitcoin. It's the case for the total cryptocurrency market cap. It's the case for the total cryptocurrency market cap, excluding Bitcoin and Ethereum, or just Bitcoin, sorry, which is total 2. This might turn into a bit of a retest. Certainly, I'm hoping. After a target was made, your bull flag target was made for this. Total 3, which is everything excluding Bitcoin and Ethereum. Very nice moves, giving some of it back like the altcoin market does. And others, which I did believe broke this. I think it's having a bit of a pullback. Might consolidate around here before seeing that continuation. This ran into all-time high resistance. If you look at what Bitcoin did when it ran into all-time high resistance, it very much sold off as well. So lots of resistance coming into play. It's very normal, I think, what's happening with the space. This is some of the ETPs. On the topic of ETPs and ETFs, we now have the spot Bitcoin and Ethereum combo, so some sort of an index now forming, being approved by the SEC as predicted, launch likely in January. Their market caps are weighted 80-20, so 8% Bitcoin, 20% Ethereum specifically. And notable that Hashdex and Franklin Templeton are first. Good for them. You're going to see this extend to the space more broadly. So imagine trying to fade the space right now when actually we know that institutions are about to sort of leverage up on it. I will be doing a number of updates on a number of altcoins later on today, just to sort of help people sort of understand what's going on with a bit more context and give my technical sort of opinion on them. But generally, guys, when we look at the space, it's still in very good standing. You've got to know the game that we're playing. I think really what's happening right now is we're having contagion from these sort of macro markets spilling into, or uncertainty around the macro markets, the big markets, the debt markets predominantly, also the currency markets, spilling into our space. It's not just crypto that's selling off, it's the likes of the stock market, but I honestly think the stock market is still in a very good standing. You know, these are just sort of approaching all-time highs for the likes of Tesla, which was a call of ours recently, and of course Amazon, sort of getting very close to its target, but having a bit of a pullback. So I don't think there's anything to worry about. Good news on the Bitcoin and Ethereum ETFs. Really what's happening is this all started on the back end of FOMC. Literally, as Jerome Powell announced a 25 basis point rate cut and the sort of call for perhaps slower rates, there's repricing that goes on. There's uncertainty that's introduced as a result of that. It's very interesting, really for me, with what happened with the bond market. So we've got TLT here in purple. This sold off because they didn't announce any kind of an adding to their balance sheet, which we're going to come on to in a second. It's very correlated with the markets. And we're also going to look at a take from Raoul talking about why they're going to add to their balance sheet. And if they're going to up the debt ceiling, they're still leaning on the reverse repo to essentially fund everything like the debt creation. This is running out drastically. Despite the Fed not adding to their balance sheet and providing liquidity via that measure, actually what's been happening, which has kind of null and void a lot of QT, is they've been draining the reverse repo that they pumped up massively to nearly 2.5 trillion. They upped the debt ceiling to around about 2.2 trillion, and now we're at 1 billion, or 100 billion, sorry. So we're not even 5%, we're not even a percent really. That's not right. We're not even 5% of what was in there when they started, or they originally upped the debt ceiling. And just last night, President-elect Trump calls to abolish the debt ceiling. We'll talk about all of this. So a lot to unpack there, guys. And I know I lose a lot of people on the macro stuff, but really, as a base case, when you get uncertainty on the macro, which was introduced, I think, with FOMC, certainly with the reaction of the bond market, that then, with bonds going down, spiked the yields on the bond because they need to make it more attractive. It's a self-regulating mechanism. And that, of course, has strengthened the dollar, which is leaning on markets generally. That's what's happening right now, I truly believe. And more broadly, there's a lot of uncertainty about the debt ceiling and actually who's going to buy the debt. So when we look at a take from Raoul, I actually think this is a good take from Raoul, feel like a big fight over the debt ceiling is brewing. That means the TGA is going to be drawn down, so the Treasury's account, and the reverse repo too. QT probably ends, because what was signaled on Friday is they're going to continue to roll off their balance sheet, with the reverse repo being drained, which we're on the cusp of. That's not the reverse repo, sorry guys. There's only $100 billion left. This government can get through it like nobody's business in the US. And he then goes on to say that's a very positive liquidity story for Q1 next year. Next, we need a weak dollar, which I believe comes on the back end of yields going down. And yields, I think, at this point are only going to go down when there's a clear buyer for the bonds and there's a kind of re-entering of the bond market, which Jerome Powell didn't signal. And that's really what sort of seeing everything play out today. So Trump has announced to lower the debt ceiling. Just a quick take here. Donald Trump and DJ Vance inject themselves further into a escalating fight over federal spending, demanding that House Republicans scrap a plan that would avert a government shutdown within days. Trump and Vance issue a statement Wednesday insisting that Congress raise the national debt ceiling and cut a range of spending proposals instead of passing the package that Speaker Mike Johnson and House Republican had negotiated with their Democrats. The irony of Bitcoin, it is very ironic, selling off when they've just announced essentially they want to continue unlimited debt is, I mean, laughable to say the least. However, there's a lot of uncertainty going on. You're seeing yields continue to climb a little bit. You're ultimately seeing the dollar get a bid, and you're seeing the bond market continue to go down. And there's lots of sort of fundamental levers why the Fed's balance sheet is really to be watched. There is absolutely a correlation with the Fed balance sheet, and of course the likes of the S&P 500 and markets more broadly. We want to see them add to this. This is what's going to sort of drive liquidity up, global liquidity, I think. Actually, I think that's all going to likely take place in Q5 next year. I think they are going to up the debt ceiling. What's the reality? They're just not going to do it and not pay their debts. They're going to have to continue to create debt, which ultimately is bullish for markets that are pegged to the US dollar. So a hell of a lot going on. I really wanted to start on the charts because it simplifies things. You've got to get used to this space. You've got to get used to what it throws at you. Is it nice seeing your portfolio fluctuate in the manner that the crypto space does? Certainly mine, because I'm very heavily in altcoins. No, it's not. Is it nice to lose 10% over a couple of days? Well, what's the alternative? Are you going to be able to time the top of every local high and the bottom of every local low in what is a broader uptrend? It's my belief that you won't be able to do that. If you think you can, try it. I've been in this space for years. I've spent tens of thousands of pounds learning to trade the markets, learning to understand charts. I don't even do that. Certainly, what you've got is a lot of ding-dongs out there that use leverage just getting washed. And that's why the crypto market is as volatile as it is. It's still a very small space. But understand the bigger trend. Understand that those bigger trends, in my opinion, are still intact. Understand what's happening with the markets right now, which is ultimately uncertainty, largely on the back end of the debt markets. And as I think Raoul was highlighting there, I think a lot of people are asking, well, what's going to happen with the bonds? Are they just going to allow them to rinse? Stablecoins, I think, play a role in that, but they're going to have to do something in the shorter term to essentially prop that market up. And the conclusion that I come to with that is, well, who's going to be that buyer? It's the Fed as a buyer of last resort. That's going to increase liquidity. It's what's going to see all those macro cycles that we haven't spoken about in a while take place. That's ultimately going to drive the crypto market. A lot to unpack there, guys. I do apologize. I'm wishing you all a fabulous Friday. The countdown to Christmas has begun. And I'll see you all in the next one. Thanks for watching, guys. Hope I didn't put anybody off the content with that joke at the start. I'll see you all soon.